Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Thursday, January 31st, 2019. So markets are up again today on the back of Facebook earnings and a couple other stocks, although you do have Microsoft down and a couple others down as well, kind of a mixed bag. But nonetheless, I think the Federal Reserve comments from yesterday, basically just to summarize the Fed yesterday, they bowed down, kissed the feet of the markets, and in every other way. I mean, it was unbelievable how a group, meaning the Federal Reserve, who just a month ago was talking about 3 interest rate hikes in 2019, basically bowed down and gave up. And while it's positive for the market right now, in my opinion, it tells us that there's going to be a major issue down the line. And I'm not talking about in a month or two. I mean, we're talking years down the line. But ultimately, one of the main reasons why I'm a fan of cryptocurrency and gold for a longer term kind of insurance play. So you talk about buying life insurance, health insurance just for the unforeseen. I think it's so important. After hearing the Fed yesterday, folks, it reinforced and made me even want to up my small percentages of cryptocurrency in my portfolio and gold in my portfolio. Because basically what the Federal Reserve said, and I'll just summarize it real quickly, but they said that they're willing to keep a bigger balance sheet. So, if you remember, during the financial crisis and for the 10 years after, they basically took on trillions and trillions of bonds, which they were planning to unload to get back to more of a normal, level. Well, guess what? They just said they're not going to do that, or they're likely, in my opinion, won't do it. They're still doing it to the extent, but they basically said to the market, any sort of hiccup will back off right away, and we're willing to have a bigger balance sheet. So what that means is on the next financial crisis, they're going to take on 5 or 10 trillion more dollars. Then they'll unload a small percentage of that when the economy improves. Then the next financial crisis, probably 10 to 15. The point is, it's going to get to be such a massive limit that it's going to cause a collapse of epic proportions, kind of like the Great Depression or worse, in my opinion. So in any case, that's the longer term view. It doesn't really matter for what we do right here, but I think it is worth taking a note. And one thing to note here, financial companies are weaker today. And if you take a look at Goldman, I have the Amazon chart up here because we're going to cover earnings. But take a look at Goldman today, down $4.50. J.P. Morgan down $1 on the day. Bank of America taking a hit, down 75 cents or so. And the reason is because the Fed being so reluctant to increase rates is just a horrible thing. I mean, it's not a good thing for the financial stocks. So those stocks are suffering. You can see yesterday they started to fall. Today they're continuing. My guess is you see Bank of America come down to this area. This is a huge support. This is probably a buy down here, but that's at least the near-term target on Bank of America. Now, going to Amazon earnings, folks. Amazon reports earnings after the bell today. The stock's having another good day. Yesterday was a big up day. Today, another big up day. As good earnings from Apple, good earnings from Facebook are coming out, it makes people think that Amazon is going to be very, very good. In my opinion, that raises the bar for success for Amazon. So, a couple days ago, you were below 1,600 on Amazon. If they reported earnings then, I think it was a no-brainer. It would probably bounce, right? Now, because you're 130 points higher than that low on Amazon, the bar is now, 10 feet higher. They have to come out with very, very, very good earnings. I personally don't think they're going to do it. I'm not short Amazon. I am short the Qs up here, though. And I do believe that Amazon likely will falter. And, even if it goes up, I think the risk reward is favoring the downside. So, upside maybe $20, downside $50 to $75, maybe even $100 to the downside. So for me, it's likely shaded to the downside. Again, I'm not a big fan of shorting a stock going into earnings. More than anything, I'll take something like the Qs and then play it so it's not so much risk. But again, Amazon to me likely will see some downside on earnings. That's really the big last name reporting. I mean, you have Exxon tomorrow morning and so forth, but those companies won't influence the market that much. But again, very worthwhile taking a note of the price action, the change in the market sentiment. The bullishness out there is palpable, which actually gets me more bearish. I did pick up some more VXXB today on the dip today because to me, again, when you hear people like some of the talking heads on CNBC saying that the December 24th low will potentially never be seen again. And that was only a 20% correction in the market, a market that, mind you, had been up hundreds of percentage points since 2009. But to say that, to me, to be honest, I think that's nuts. I mean, look at what we went through in 2000. We saw, what, 50%, 70%, 60% drops in the market in 2009. I think we're going to have another event like that. Now, not for a couple of years, but it will come, and it'll unfortunately be worse. As a swing trader, it doesn't really matter too much to me. I'll swing trade long, I'll swing trade short. We'll make money in the research center, which is awesome. But again, it does, the maneuvering here is scary. If you're a longer term visionary, it is scary to think about the house of cards that's being built, not only, by the Federal Reserve, but also by our government as we continue to see the national debt skyrocket more and more. So, anyways, bottom line is Amazon again. We'll see where it closes today, but my fancy is for a drop on Amazon. Um, Facebook again is having a big day to the upside, but notice how it's into the 200 moving average here. If you look at Microsoft, Microsoft's down a little bit, although only down about $1.50 today on earnings. But Microsoft should continue to fall in the coming days. I have a target below $98 here. Probably in the next 2 weeks, you'll see that hit. So it's about a $7 drop from here to target on Amazon on Microsoft, and I am short Microsoft from a few days ago at 107 and change. So again, we're in the money already pretty nicely, but I am looking for a 107, a 97 handle, high 97s to cover that short. One stock I think is overdone and should pull back is KLAC 10 core or KLA 10 core. Look at the amazing move here from basically $80 to almost 110. This should pull back to the 200 and this pivot here. So you're looking for a pullback just slightly above $100 for that. Should be an easy short there in the coming days. And I do think Apple has a little bit more upside, frankly. So I have if we go to the Apple chart here, last thing I'll cover here real quickly for you guys. But I think Apple, again, a little bit. I think it gets to about 71. And then starts to stall out. That could hit as early as tomorrow. Today it got as high as 169, but 171 is kind of my short-term target on Apple as I continue to ride this up. All right, guys, I think that's about it for today, but very intriguing action. Again, the more bullish the sentiment gets, the more likely we'll see the markets pull back a little bit to catch those people off guard. Keep an eye on any topping tails out there, any kind of distribution events going on. Those can be indicators that something like that's going to come on. Have a great one, guys. Take care.